New York is the largest city in the United States. Manhattan, long renowned for its beautiful skyline, houses 72,000 residents per square mile. To fit so many people on such a small land radius required building up. Who built New York's tallest buildings? In recent years, machines. Years before that, men like this. One of the important streets in Manhattan is Wall Street, and I'm here to tell you about an important trend taking shape there. In case you haven't heard, the S&P 500 index is at an all-time high. If you're invested, it's important to understand how we got here. In 2008, the Federal Reserve had a heavy burden, the nation's financial burden. Banks, businesses, and consumers alike were over in debt, and the Fed needed to provide emergency relief. Fed officials also wanted to build something. Specifically, they wanted to engineer a stock market rally to help arrest the deflationary forces in the economy. To achieve its twin goals of bailing out distressed assets and stimulating a stock market recovery, what the Fed did was they decided to buy other assets outside of their normal treasury purchases. This became known as QE, quantitative easing. The Fed expanded its balance sheet massively to $4.5 trillion, gobbling up mortgages and other risky assets. As the Fed crowded out existing holders in the securities it was buying, it effectively pushed everybody in the investor universe further out on the risk curve. QE Tower symbolizes the massive bull market the Fed has engineered in risk assets. While there has been a long economic recovery, it hasn't been very strong. Nonetheless, it's been a very big bull market because valuation multiples have gravitated higher and higher. Currently, the Shiller PE ratio for the S&P 500 is at 30.2. The only times it's been higher are 1999 and 1929. If you've been long stocks, houses, or pretty much any other asset, it's been a wonderful ride. However, if you're paying attention, signs of froth are everywhere. For instance, the level of assets in proportion to income is higher now than at the peak of the housing and tech bubbles. Based on sentiment surveys, few investors have a fear of heights. Rather, people are feeling very comfortable with the bull market that it'll continue indefinitely. Now, remember those guys that built all of the skyscrapers? Yeah, well, they worked at really great heights day after day. Over time, the heights didn't bother them as much, to the point where they did complacent things like lunching on a scaffold, or napping, like these guys here. Actually, I'm going to let you in on a little secret. These pictures were staged. The guys really are up on the scaffold, but the photographers asked them to pose for the pictures to promote the buildings. In reality, these guys worked during the Depression to feed families and they risked their lives to do it. They knew the risks that they took and they accepted them, but they were careful every day. So, how do you invest in an expensive market? Carefully. Remembering that the higher you go on the valuations, the further the fall that you could potentially see when things go wrong, and they will eventually. So be diversified, know your risk boundaries, and get your portfolio where it needs to be.